Welcome back to Investing Talk Podcast.
Good to be here.
Today we're taking a closer look at SES AI Corporation. You sent over their recent due diligence report, looks like it's from April 2025, and some news articles too.
That's right. We've got a good bit to work with: financials, tech details, market position, management moves, risks.
And that recent stock activity. Quite a jump.
Indeed. So our goal today is really to unpack the key things you, the listener, should probably know about SES AI right now.
Okay, let's start with the money side, the financial health. That due diligence report?
Yeah.
Wow, 190% quarter-over-quarter revenue increase to $5.8 million in Q1 25.
It's a pretty dramatic increase, yeah. And, they're guiding for $15 to $25 million for the full year 2025.
So they're expecting that momentum to continue, maybe even accelerate.
That seems to be the expectation, indicating some pretty rapid anticipated growth.
And the Q1 earnings per share, EPS, came in at -0.04 cents, better than the -5 cents expected.
A slight beat there. Always good to see.
Also noted, no long-term debt. And they expect liquidity over $200 million by the end of the year.
Correct. That gives them a substantial cushion, quite a bit of financial flexibility, which is important.
But there was an operating cash outflow, $22.8 million in Q1 and about $900K in CapEx. How should we think about that?
Well, for a company in this phase, investing heavily in R&D and trying to scale up production, that kind of outflow isn't necessarily surprising.
Right. They're spending to grow.
Exactly. It's an investment. The key thing you'll want to watch is how effectively that spending translates into, sustained revenue and positive cash flow down the line.
Makes sense. The report also mentioned a negative ROE, return on equity, because of the net loss. And it said peer benchmarking is tough.
Yeah, that's because their specific niche, combining lithium metal batteries with this AI software platform, Molecular Universe, it doesn't have many direct public comps right now.
So standard comparisons are tricky.
A bit, yes.
Yeah.
You have to look at other indicators, progress points.
Okay, but one number that really stood out was the gross margin, 79% in Q1. That seems incredibly high for a battery company. Usually you see, 20-30%?
It is remarkably high. And the interesting part, according to the report, is that a big chunk of that is apparently tied to the upcoming revenue from their Molecular Universe software and services.
So it's not just battery sales driving that margin yet. It's the software potential being factored in somehow, or early service contracts.
It seems to point towards a future blend. It suggests this dual model high-performance batteries and a high-margin software service component. That could be very powerful if it pans out.
Okay, let's shift gears to what they actually do. The tech, so high-performance lithium metal batteries, rechargeable.
Right. Primarily targeting EVs, electric vehicles, but also other demanding applications. Things like urban air mobility, flying taxis, essentially, plus robotics, drones.
So applications where energy density and performance are really critical?
Precisely. Their edge is supposedly their proprietary li-metal chemistry, offering more energy, maybe faster charging.
And the AI part. Molecular Universe.
Right, that's the other key piece. It's an AI-driven software platform designed to dramatically speed up the process of discovering and optimizing new battery materials and chemistries.
So instead of just trial and error in the lab?
They use AI simulations to predict performance, test virtual combinations, potentially getting to better batteries much faster. It's a significant potential differentiator.
And they showed something off at CES 2025 recently. An AI-enhanced cell.
A 2170 cylindrical cell specifically mentioned for humanoid robotics and drones. Again, targeting those advanced high-value niches.
Positions them as an emerging player in, let's say, next-gen batteries. Competing in the same sort of space as QuantumScape or Solid Power, companies exploring similar advanced chemistries.
Broadly speaking, yes. They're all tackling that post-lithium-ion challenge, trying to find the next big thing in battery tech, though their specific approaches differ. SES is focused on li-metal with this AI layer.
Okay, what about the people running the show? Management. CEO is Dr. Qixiao Hu, the founder.
Yes, founder and CEO. He has a background in this field and, importantly, has secured partnerships, like the one mentioned with Hyundai. That's a form of validation.
The report notes limited public financial milestones before this recent Q1 surge, though.
That's not entirely unusual for deep tech companies pre-commercialization. The focus is often R&D, partnerships, hitting technical milestones first.
And the CFO, Jing Nealis. Focus seems to be on liquidity. They highlighted the $240 million cash reserves and capital efficiency.
Right. And tied to that is the share buyback program they announced. $30 million authorized.
Why do a buyback now when they're still investing heavily in growth?
Well, it can signal a few things to the market. Management might feel the stock is undervalued. It reduces the share count, which can help EPS later.
So a sign of confidence in their own prospects.
Often, yes. It suggests they feel financially strong enough to return some capital while still funding growth, and they believe in the company's future value.
Let's talk about that value. The market reaction. The stock price recently jumped. What was it, over 40%?
Yeah, 40.41% increase mentioned in the news reports. That's a substantial move.
What drove that? Just the earnings beat and the buyback.
Likely a combination. The better-than-expected earnings, the buyback announcement signaling confidence, and probably continued optimism about their technology progressing.
Plus, this molecular universe platform, MU0, is launching today, April 29th.
Correct. That launch is definitely another factor, likely fueling investor interest. A successful rollout could be quite significant for them.
Okay, so lots of positive signals, but there are always risks. What does the report flag?
Yeah.
Scalability is a big one, right? Their Li-metal tech is still relatively unproven at mass scale.
That's probably the central challenge. Going from lab or pilot scale to mass manufacturing for something like EVs is a huge leap. Reliability, cost, volume they have to nail all of that.
The report also mentions customer concentration risk, relying too heavily on a few partners.
Yes, that's common for companies starting out with large B2B deals. And potential for future dilution, needing to raise more capital later, even with the current buyback. That's often noted in filings for growth companies.
And competition. The battery space is fierce.
Incredibly so.
Yeah.
You have the established giants constantly improving Li-ion, plus other startups with different next-gen approaches.
So the AI platform could be a differentiator.
It could. But ultimately, they need to prove it translates into market share and solid financial performance compared to everyone else.
Any other risks mentioned?
Yeah.
Regulatory. Supply chain.
Yes, both. Safety certifications are absolutely critical for batteries. Any issues, there can be major setbacks. And supply chains for materials like lithium are under increasing strain as EV demand grows.
Bottlenecks could be a problem.
Potentially, yes. And just the overall evolving regulatory environment for batteries, safety, recycling, material sourcing, they'll need to stay compliant.
Okay, so pulling this all together, what's the takeaway for someone watching SES AI? They seem to be at a really interesting point.
I'd agree. You've got this impressive recent revenue growth, potentially groundbreaking tech, using AI, strategic moves like the buyback.
The big but is the execution risk, scaling the tech, navigating competition.
Exactly. Those are significant hurdles. It's typical for companies in emerging tech fields.
What seems particularly fascinating, though, is this molecular universe platform launching today. If that AI approach really works as advertised.
It could be a genuine game changer for how batteries are developed. It really could accelerate innovation significantly.
Which leads to the key question, I suppose.
Yeah.
How fast and how well can they actually scale this whole thing, the tech, the manufacturing, the software side, and turn that innovation into sustained profit and market leadership?
That's the core question you need to keep asking. Yes.
So definitely a company in a high-growth, high-stakes phase. Watching future earnings, product developments, and how they handle that competition will be crucial.
Absolutely. And for anyone wanting to dig deeper, doing your own homework is key. Visiting SES AI's investor relations page for their full reports would be a good starting point.
Good advice. And if you found this discussion helpful, please do subscribe to Investing Talk Podcast, maybe give us a like or leave a comment.
It really helps us understand what analyses are most useful for you.